Income investors might like TLTW's double-digit yield, but the price of TLTW went down as interest rates went up. TLTW was launched here. The timing was not good. No surprise then that the price history of TLTW looks like this. Now that interest rates are actually falling, will TLTW finally start performing? Well, based on the last 6 months, it's starting to look that way. I first reviewed TLTW in May 2023. Back then, the rate hiking cycle was almost over and the rate cutting cycle seemed just around the corner. For a fund like TLTW, that meant things were looking up. Of course, now we know that the rate cuts were a long time coming. The wait extended to more than a year. Now that rate cuts are real, it's time to revisit TLTW and see if this juicy yield with monthly payouts might make sense. Let's start with the income because that's changed a lot since last year. In the early days, the payouts were huge and so was the yield. When I published that first review, the yield was over 19%. Then in the beginning of 2024, the payouts fell and so did the price. We'll cover the reasons for that shortly. This distribution chart came from Snowball, but I mostly use Snowball to keep track of my current and future income. I can visually rank my portfolio by current yield, I can see yield on cost, and know exactly when the next dollar will land in my account. There's a link in the description for a free trial and a discount. Most websites are quoting a current yield for TLTW of over 14%, which I think is a bit optimistic. The trailing 12 months of distributions divided by the price does work out to that number, but as we saw, the recent payouts are so much lower than they were 9 months ago. If we just multiply the average of the last 2 payouts, which would be 25 cents, by 12 months, we get $3. Divide that by the current price of $27.12 as I record this, and we get a yield of 11%. I think that's more realistic, at least for now. To understand what's going on with the price and the payouts, we need to understand how TLTW generates income, so I'll give you a quick recap. What is TLTW and how does it generate that 11%? The TLTW ETF combines 2 things, Treasury bonds and option income. The Treasury bonds are long-term bonds, and by long-term I mean 20 plus years. The fund manager, BlackRock, doesn't need to buy these bonds individually because they already have an ETF consisting of long-term treasuries. It has a similar ticker symbol, can get confusing, it's called TLT. So for the treasuries portion of this fund, TLTW simply buys its sister fund, TLT. By the way, if you're new to the channel, I retired in 2017 and that's when I got serious about researching my investments in greater depth, and this channel is where I share what I learn. I mostly focus on stocks and funds paying consistent yields of 8 to 12%. And if you'd like a copy of my portfolio, it's called Armchair Insider. Link in the description, it's free. Let's get back to the sister fund, TLT. It yields just over 3.5%, a long way short of the 11% I mentioned earlier for TLTW. So the rest of TLTW's yield comes from option income. BlackRock creates that income by selling monthly call options on its TLT portfolio with a strike price 2% above the current price. If you're not familiar with covered call ETFs, I'll link this video in the description. It's called How Do Covered Call ETFs Pay Such High Yields? So given this 2% out of the money option strategy, that means that over a 1-month period, they're selling the right to any upside greater than 2%. In return, they receive an option premium, and it's that option premium that comprises most of the monthly payout to shareholders. Option premiums move up and down with volatility, which means that when there's a lot of uncertainty in the market around interest rates, volatility is higher and so is the income. The TLTW payouts have been lower in 2024 because volatility has been lower. Interest rates were unchanged for about 13 months. And then recently there was a long anticipated first cut. No surprises, no drama equals smaller option premiums equals smaller distributions. Let's double check that all this income and these numbers actually add up. You can get option chains from any stockbroker website or Yahoo Finance, but I'll use Seeking Alpha because it's handy. TLTW sells call options on long-term treasuries, which it holds in the form of its sister ETF, ticker TLT, which we mentioned before, and TLT is currently priced at $97.83. Options are sold monthly at 2% out of the money, so we'll add 2% to the price, which comes to $99.79. The closest call option available is $100, which is near enough. I'm recording this on September 26th. The closest I can get to 1 month out is the October 25th call. That'll do. 58 cents is halfway between the bid and ask price, so we'll use that as the monthly option premium received. Multiply 58 cents by 12 months, and you get $6.96 divided by today's TLT price of $97.83 equals an annualized yield of 7.1%. Then we add the yield that TLT is currently paying, 3.67%, and we get a total of 10.8%, which is pretty close to that 11% that I estimated earlier. In case you're wondering, you don't actually need TLTW to use this strategy. You can just buy the TLT ETF and sell covered calls yourself. I don't mind paying BlackRock the 0.35% to do it for me, and in reality, it's less than that. If you hold TLT, the expense ratio is 0.15%, and that's built into TLTW's 0.35% ratio, so you're actually only paying a net of 0.2% to manage this covered call fund. TLTW's assets are almost completely made up of Treasuries. That sounds quite safe, and it's producing tons of income. The problem is that since inception, the stock price for TLTW has been falling. The key thing to understand with bonds is that their price moves in the opposite direction to interest rates. This is especially true for long-term bonds. If a long-term bond yields, say, 4% and interest rates rise to 5%, then those 4% bonds that can't be cashed in for 20 years become less attractive, so their value falls. Until recently, that's exactly what's been happening for the short lifespan of the TLTW fund. Fortunately, that's changing, as we'll see when we look at the pros of this fund. Apart from the yield, here's what I like about TLTW. The first pro is the obvious one. TLTW is set up to do best when interest rates fall. For most of the life of this fund, interest rates were either climbing or flat. The result was plenty of income, although it hasn't been consistent, combined with a gradual decline in price. Now that rate cuts are a reality, TLTW has begun to turn around. I'll demonstrate this using total return charts because most of the returns for a fund like this come from the income, and a price chart doesn't show the income. Even though the S&P 500 isn't technically a benchmark for a bond fund, I think it's still useful for some context. Going back to TLTW's inception in August 2022, we can see that it got off to a good start and then slowly eroded away. Zooming into the past 5 months, and it's a different story. Even though the distributions are smaller than they were last year, the market has responded to rate cuts and the expectation of rate cuts with increased demand for long-term bonds. TLTW has bounced back to the tune of 14% in just 5 months. Not bad. In case you're curious about its sister fund that we mentioned earlier, TLT, that's the fund that holds long-term treasuries but doesn't write covered calls, the result has been similar to TLTW. It's paid less income, a bit over 3.5%, but it's appreciated more than TLTW, and the net of all of that is that they've been tracking each other pretty closely. The less obvious benefit of holding TLTW is diversification. If we look at that crazy week that began on August 5th this year with a major market sell-off, TLTW didn't blink. I'm always looking for income streams that don't strictly follow the S&P 500 to balance out the portfolio so that if, say, Nvidia has an earnings miss or some other factor spooks the market, it doesn't necessarily mean that TLTW will follow. Here are the risks and concerns I have about TLTW. First up, this is a directional bet, meaning that its success is closely tied to the price of long-term treasuries. I prefer investments that do well regardless of an external factor like that. This means that TLTW is not ideal as a long-term hold. You can't just buy it and forget about it. If you hold it at the wrong time, it's a dud. If the Fed dropped interest rates dramatically, it would boost the value of long-term treasuries and therefore the TLT fund, but the TLTW fund could only increase by a maximum of 2% per month because the gains are capped by selling those covered calls. In other words, a sharp decline in interest rates would see TLTW missing out on some of the gains. As we saw earlier, the income is heavily affected by the volatility of the interest rate market. There's no way to predict that. At least the fund is simple enough that we can always check on volatility by reviewing the option chain, as I demonstrated earlier. Those are my three major negatives, but if you're interested in TLTW, I suggest reading this analysis by Juan de la Hoz because he goes into further detail about the risks of long-term duration treasuries and how that affects TLTW. Of the three TLTW analysis articles I researched on Seeking Alpha, his was my favorite. If you're an income investor, Seeking Alpha gets you access to more research than any other website or app. I'll put a link in the description to Juan's analysis and a link for a free trial and a discount. I'll also link this video that walks you through the 4 features I use to analyze income investments. I like TLTW, but I don't love it. It only works under certain conditions. Now that rate cuts have actually taken place, I think the risk-reward ratio has improved. Specifically, I think the risk of rates going up is small. That's good for the price of TLTW. And I think the risk of volatility shrinking even further is also pretty small, so the income should be fine. I haven't bought back into TLTW yet, but it's on my short list for the near term. I mostly like it because it doesn't behave exactly like the S&P 500. However, given the risks, I don't think it'll ever be a top 10 holding. When I do make a move, I'll update Armchair Insider. The most recent edition went out last week and covered my purchase of EIC. Speaking of which, EIC is also paying a double-digit yield. If you missed out on that one, just click over here. That wraps it up for this TLTW update. More Armchair Income coming soon.